Good morning and welcome to GrainTV. It's September 13th, 2012. To my right is Cody and I'm Brock. Let's turn over to FireTip software to check out the quotes out of Chicago. As you can see here, corn's just up a couple cents. Beans are the leader of downside, off about 10 cents after a sharp rally yesterday. Wheat in Chicago and Kansas City up a few cents this morning. I think the thing that we need to pay attention to today is going to be the dollar index. As we know, the FOMC is currently having their meetings, and Ben Bernanke is going to be speaking later this afternoon.
Absolutely. I think this morning what we're seeing is a little bit of a mixed trade here. It almost seems like we did a switch up from what we saw yesterday. Yesterday, corn was down, wheat was down, and beans were up sharply. This morning, we're seeing a bit of a pullback in beans, but we're seeing some firmness out of corn and wheat. We did have export sales this morning. Wheat came in at 381,000 metric tons. Corn came in at 214,000 metric tons, and beans came in at 628,000 metric tons. Those were good sales, or moderately good sales for beans, especially considering this time of the year. Corn, not so much. Wheat, also not so much. Wheat, we seem to be not so competitive. I know that Egypt came out with a tender. It's the 7th tender they've had this month for wheat. They're trying to catch up on some purchases, and really we didn't win a whole lot of it. So I think that is a little bit of a concern. We aren't as competitive on the global market yet, but I think as Russia, as Ukraine, and their depressed harvest levels, their depressed production, as they start to run out of grain, I think people will start turning toward the U.S. Perhaps we'll get a little bit of strength here in the later part of the market again.
You know, I think the dollar index really, basically having a sharp sell-off over the last few sessions here is really going to help us out on the world market. That's going to make us more competitive to export to countries like Egypt. And I thought it was kind of shocking that Egypt came out yesterday and said specifically that they were looking for wheat from the United States. Today, when they actually made the purchase, they did not go to any of the purchase did not come from the United States. So I thought that was kind of shocking. You know, something that I think that is driving the corn market a little bit, putting a little bit of a bid under it today after a little bit of a sell-off. I think Strategies Grain came out from the EU and said that they are revising their anticipated production lower. They lowered it by about 4.3 million metric tons, and this is quite a bit lower than what the USDA currently has them at about 57 million metric tons. So that's a little bit shocking that the USDA did not revise their anticipated production for EU lower. Maybe we'll see it in the October report.
Yeah, I think that's fair enough. Also, one thing to mention, we did have an ethanol report. Brock, I know that ethanol continues to be a very major user of corn, even though it has been, we have seen demand destruction forecasted by the USDA in both their August and their September WASDE report. What are we seeing in the ethanol sector?
You know, we did get a big revision lower in the August report for ethanol usage of corn. This go around in September, we did not see any revisions lower for last year or for anticipated use this year. The thing I'd like to point out here is that you know, we are quite a bit lower on the production, about 7.2% below where we were at this time last year per weekly production of ethanol. But the thing to take out of this is that the millions of bushels that we are using is right on par with what we are expected to use by the USDA this year. So if we continue at this pace, we should meet those expectations by the USDA.
That sounds fair enough. Guys, pay attention to the FOMC meeting later on today. That's going to be driving the market. Remember, you know, we have a lot of funds, a lot of fund money in the grain complex. You know, they'll be paying close attention when they start moving, when they start readjusting. That's when we see the grain start really moving and increasing in volatility. So pay close attention to the FOMC minutes. That will be driving the trade. Remember also that Ben Bernanke, there's a lot of expectations for him to build in some sort of quantitative easing, some sort of stimulus. But remember, he doesn't necessarily have to go into direct bond buying. There's many different tools that he could use. So pay close attention to the language that he uses, and we'll have to just see what the market and how the market reacts to what he says. But anyway, follow us on Twitter, follow us on Facebook. We'll be back on Friday for the weekly wrap up. Thanks for tuning in.